It has been 2 weeks freestyling on this challenge account. So doing a freestyle trading includes a lot, includes FOMO, includes emotions, includes greedy, and so forth. But what if I were to follow my little trading plan? Would I have been profitable within those 2 weeks? Would I have been passing this challenge already? I don't know. But would I have been? Good. So if I go into this, I had a 25k challenge account to which currently I'm in negative 3.4 drawdown, and that's around 800, right? So you can tell my drawdown looks a little bit of stairs going downwards, right? And that's what we don't want. We want stairs going upwards. That's one. But if you look closely onto my trades right here, I had only 3 wins, and most of those trades are losses. So 3 wins out of how many trades though? If we look closely, how many trades did I took? These are around like 11 trades, I assume. Yeah, we can count. Yeah, there are around 15 trades which have been taken within the 10 days number. And my biggest win is around 272, and biggest loss is 171. That's around 1.9, something like that. Yeah, profit factor or risk to reward, not profit factor, just risk to reward. So out of these trades, I've been freestyling, right? You can tell all those losses have been taken. Is it market condition? I would say no. Why? Because I have my own trading plan that led me to purchase this 25k account. What's the plan though? Let me go and show you. So if you look closely before I go into the plan, if you look closely, I've been trading gold, I've been trading euro, and Nasdaq, right? These are the 3 pairs which I look into: gold, Nasdaq, and euro. So let's go into one of my trading plan. If I were to stick on to that disciplinarily, is it disciplinary? So what if I were to stick on my trading plan on NQ, right? So what's the trading plan first? So our trading plan is just like steps to which you follow from pre-market, post-market, and also during the market. It doesn't matter if you win or you lose, right? If you follow your plan, then you discipline. But if you didn't follow your plan, then the plan has not been followed at all. So what's the trading plan? My trading plan actually. So my trading plan for NQ is called a 9 a.m. bullet, or a 9 a.m. train, right? Not silver bullet, stuff like that. Now I just call it a train, a 9 a.m. train on NQ. So I have only 6 steps to take into consideration, to which the first one, I mark my 9 a.m. 1 hour candle of my 9 a.m. candle, right? High and low. Thereafter, I'll wait for either side to be swept, right? The high or the low. After either side to be swept, I look for my entry, and my entry is just a sharp turn. What's a sharp turn? A sharp turn is imbalance high, imbalance down. Else that's taking a short position, but taking a long position is just imbalance down, imbalance high. It's creating this a V-shaped form. So where do I put my stop loss? My stop loss, if entry loss is on an FEG, my stop loss is on the swing low or high. If an entry is on bag, my stop loss is on the second bag's candles high or low. I'll show you, no problem. But also, what's my entry window? My entry window is around 10 a.m. to 11:10 a.m. New York time. So remember, New York time. I want to show you this visually so that you can understand. So that's a visual here. This is called visual learning. So this is my 9 NQ 1 hour train. That's at 9 a.m. New York time. Remember, New York time. So how many steps do we have? Like we have around 6 steps. Oh, we'll have around 5 steps right here, and within those steps we have sub steps. So let's look into that very quick. So on 1 hour chart, I go into 1 hour chart and mark my high and low of 9 a.m. candle. As you can tell, I've marked this high, I've marked the high and low of 9 a.m. candle. Thereafter, I go into 5 minute time frame, because time frame alignment is something you should take into consideration, right? So on 5 a.m. chart, I mark vertical lines. Yeah, I just draw vertical lines so that I can align the time. So you can tell this is before, chart is loading. What's happening? No. So no problem, I can just zoom that. You can look closely. This is before, right? That's 5 minute time frame. So on 5 minutes, I'll mark my 10 a.m. and also mark my 11:30 a.m. time. Like, so you can check, mark vertical line from 10 a.m. to 11:30 time frame. But remember, I took my entries during this time window. I don't take my entries during the afternoon time. Put that into considerations. Thereafter, marking those, I just go on to the same time frame, the 5 minute time frame. I wait for sweep, either high or low of 9 a.m. candle. Remember, these are blue lines which have been drawn. I need them to be swept. So I mark my area on blue, stuff like that, right? Entering these blue area zones. I want to see price entering these blue area zones before I take my entry. So once they enter that, that means they have swept either the high and low. So put that in consideration. Thereafter, you can tell that this was before and after. Price just went onto the blue zone, and that blue zone is just the window between 10 a.m. and 9 a.m. and also between the upper layer of high and also lower layer of low. So it went on the upper layer of high, and that's a window like there. So what do we wait right here? We just need to see a gap going down, either an FEG or a bug. So on the same time frame, that's a fourth step. We wait for a gap either side, either FEG or a bug. So let's see. Price just went down and created an FEG right there. That's a bearish FEG. So we take an entry off of that. What happens? We mark that FEG. You can tell this is before. After we mark that, what do? We take our entry that's there. And remember, what did the instructions say, or trading plan say? If you take an entry on a FEG, your stop loss should be placed on high or low of a swing point. So what will happen right here is take an entry, set stop loss, and take profit. That's fifth step. But there are sub steps into the fifth step. A, take entry. Once the third candle creating the gap closes, take an entry. Just that's a confirmation that an FEG has been created. When done with that, you just need to look for stop loss. Where do we place the stop loss? It depends on the gap, either an FEG or a bug. So if it's an FEG, press your stop loss beyond the swing points. Where is our swing point? Our swing point is right here. So you place your stop loss beyond that swing point right there. Great. Thereafter, pressing your stop loss, then you need to press your take profit. So before we continue, the bug, if it's bug beyond the gap second candle. So if this was the bug actually, if this was a bug, what's a bug? A bug is a breakaway gap, meaning that if this candle didn't close within the second candle, it closed out of that second candle, that's a bug. Where do we press our stop loss? Our stop loss we press above or beyond the second candles which created the bug, which were the second candle. This is the second candle, and we press right here. That's it. Then after pressing us there, this shows you here's where we press the stop loss. If it's a bug, we press beyond the second candle. But take profit, where do we press take profit? opposite of the 9 a.m. candle, either low or high. Watch. Here's where we press our stop loss. Here's where we take our entry, and we just take a profit on the low right here. It's just we are playing with the 9 a.m. candle. Watch. Here's where we press our take profit right there. Nice. It returns the risk to reward of 1.5, which is cool. Thereafter, price just bam went to a take profit, and we're done for the day. That is our 9 a.m. train. So did I follow this trading plan? Absolutely, I would say no. Why? Because if you look onto my trading history of this challenge, 25k challenge, to which I wanted to take this challenge, and so that I can see if I'm really disciplined, right? If you look closely, I only took one trade of Nasdaq, which is right here. That's very crucial, and that should be noted, right? And it was just a single loss. And if you go into my dashboard, you can tell that Nasdaq win 0, loss 1. Just a single entry. The rest, much of the trades were taken off of gold, but that's for another day. Let's go and continue. So what if within these 2 weeks, which I took, oh, not 2 weeks actually, that was one, I started on 21st, 1, 2, 3, yeah, 3. Yeah, those are 3 weeks actually. So what if I were to stick onto my trading plan off of those 3 weeks? Would I have been past the challenge, or I would have lost the challenge? I don't know. Let's do the back test then, shall we? Thank you. Let's do it. So I will go onto my FX Libre, create my back testing session, and I'll call this NQ 1 hour trade. How much? That will be 25k. Thereafter, I'll select my Nasdaq. Where are you? Nasdaq, like there. Option doesn't matter. That was a 3-week trade, a 3-week session actually. So when did I start? I started on 21st. This is the day where I started trading, 21st. And what's today? Today is 10th, but I will put it on Friday during the NFB. So select that and create. Nice. Me too. I want to be surprised with my own trading strategy or my trading plan. So what should I do? First, I would just need to check my time zone. Yeah, New York time zone. Nice. Second is 1 hour. I'll go to my 1 hour. Third is, yeah, nice. We are on to 9 a.m. I'll mark my high. I'll mark my low. That's nice. But I've shown you my trading plan. I've shown you my challenge which I took, but I didn't show you the back tested data. Because you might be saying, okay, yeah, man, you showed the plan, but did it actually work? I will show you that then. So let's go here. Let's go to my trading and NQ 1 hour trading plan. So if you look, I have trading plan, back tested data, and also I have 4 tests. So I'll go to back tested data, increase that size. Then on back tested data, I have around 236 trades, right? And these trades have different categories, but you can look, we have the outcome, we have the return on investment, we have entry type, we have is FEG or swing point swept. What does that mean? That means we have taken the highs or lows of the 9 a.m. candle, but we need another confirmation factor, either after taking the high, then the price just went and swept high liquidity, or just entered an FEG, so the FEG or the liquidity just confirmed the reversal. That's what is FEG or swing swept. That's the point. So let's go and see onto this data. Here is just an overview of that. So if the bag plus swept, we have a bag entry and we have swept high liquidity or low liquidity, then out of 236 trades, I would have taken 75 trades. Yeah, 75 trades. Then wins would have been 40 and losses would have been 35. And return on investment, or risk to reward, or return on investment in terms of percentage, I would have 34.62. Win rate would have been 53 win rate. 53. You know what that means in the trading space. And the expectancy is 0.4616. That's good. And average win is 1.7. Risk to reward ratio is 1.7. 1.74. That's good, right? It's above 1.5 and also it's above 1. But if I were to use only the bag, which I've shown you, previously, I didn't show you the price turned according because it has swept something or has entered an FEG, right? So if I would have entered only the bag, it would have given me 134 trades, which is quite reasonable out of 236 trades. But wins would have been 63 and losses would have been 71, which is quite okay. And also return on investment would have been 28% or 28.5%. And also that is quite OG good, right? But also the win rate would have been 47.01. And the expectancy is 0.2, which is an average, right? Average win, that would have been 1.58. And that's okay. That's also a good risk to return. Risk to reward ratio, and risk to reward ratio same 1.58. And if statistically and also personally the feasibles to be taken is, to me, realistically it will have been bag. That's why I showed you only the bag. I didn't show you the swept part, because human, like I'm a human, right? I wouldn't wait out of 236 trades to take only 75 print trades. We all know that, right? But out of 236 trades, I'm capable of taking 134 trades and leave out the 100 trades. They don't make sense to me, right? Nice. But if I were to enter only on sweeping the liquidity off of 1 hour, then look, risk to reward would have been good, right? Only sweeping the highs and lows. If sweeping is this, risk to reward is good, 26. Win rate 43, which is quite okay. Quite okay, not okay, right? And average win would have been 1.76 and the risk to reward would have been 1.76. That's okay. But when we enter without sweeping anything, that's a negative return to reward, 37 win rate. If I had to enter off of FEG, that means price just went high, swept the high and created that FEG, which I've shown you previously. I would have taken around 102 trades and 33 were wins, and double of that are losses. Like 69 trades are losses. That is a negative return on investment. Win rate is 32 and expectancy is negative. That's not good. And if I were to consider not a bag breakaway gap, if I would consider an FEG plus sweeping of liquidity, then I would have get 53 trades out of 236, which is not good at all. And wins would have been only 16. That's detrimental. I didn't know this because I was much into FEGs, right? Fair value gaps, blah blah blah, stuff like that. But once the data showed me your trading plan is good when you have breakaway gaps, I was like, yeah, for real. Yeah, that's the quality and good stuff about data. And if I go on to risk to reward, it's good, it's big, right? When you win like 1.8, right? That's close to 2. But if you take that in a long-term base, win rate is 30 and expectancy is negative. But also, out of 236 trades, I would have taken only 53 trades. Yeah, I would have followed the plan in and out, but what's the return? The return would have been -8. Out of these 53 trades, only 16 would have been win. That's not good. So that's nice. This is a back-tested strategy with baked data, and this was created on September 4th, 2025. Right. So, and these were all the trades which were taken. So that's nice. I've shown you the trading plan. I've shown you the back-tested data, but also I want to show you what if to be disciplined and stick onto my trading plan, because for 3 weeks I've been freestyling my entries, stuff like that. So let's get into it. Yep, we have this 9 a.m. candle light here, you can tell. Then we have the swing high, where the swing high light here, I'll mark that red, that's the swing high. And with the swing low, we do have swing low? No. Swing low is there. So what do we want to see is, I want to see price do something like this. Where are my lines though? I'm looking for something. What is it? Okay. Path. So if I to continue low, I want to see this sweep right here, and I'll look for a sharp turn. If a sharp turn shows, I'll take an entry targeting this high right there. But realistically, I don't want to see price, yeah, sweep that high. That's okay. Comes and sweeps this. That's okay. Creating a bag off of that, that's okay. But will I take an entry? I'll be skeptical about that. Why? Because you look the distance between that 9 a.m. candle and the swing low right there. That's a big distance right there to be covered. So not interested at all. So my watch currently is looking onto sweeping this low and showing a bag going high. I'll take that entry. Will I take FEG entries? I would say, if you were you, what would you say? Would you have taken the FEG entries? No. Because why? Data says so, not me. I'm in love with FEGs, but data tells me, no, bro, you don't need to take FEGs. So let's get into it and stop yapping. Let's get started. Now we are starting the backtest version. Okay. Price, I'll go to 5 minutes. Okay, we have swept. That's nice. A sharp turn. Nice. We have river gap like there. I will do this. Take my entry. Wait. There. Like there. And at least one. It's okay. Control M. What's my risk? So I wouldn't risk 1% for this for the challenge, right? Through what I said to myself, for the challenge I'll risk 0.5. So that's what I'm risking. 0.5. Why? Because 0.5, that's what's kept me still onto -3. Look at these trades. If I were to take 1%, 1%, 1%, 1%, I would have blown the challenge though, right? So that's what I said I would take. 0.5. That's okay. Save and let the market plays out. I've been stopped out. That's okay. We call that a little of the lines, so forth till next day. So I'll go to 1 hour. Wait. So 3, 8. Nice. Mark the high, the low. Nice. We have swing point, yes. Right there, swing point. We have swing point, yes. Right here, swing point. What do I want to see? Either swing, either of those sides, right? 1 hour. Nice. Oh, we swept already. Nice. If we get the bag and sweep over that, that should be okay. Yeah, we did that. I want to see a gap opposite side. Do we get that? No. Now I'm tracking down the time until 11:10 or 11:30. Get a bag. Nope. Nope. 10. Okay. 20. 30. Now the day is out. I'm out. Yep. Get rid of that. An hour. Set chart. 9 a.m. Mark the high. Mark the low. Turn those into blue. Swing point. Yes, we do have like there. That's red. Swing point. Yes, we have right here. Go to 5 minutes. Want to see a sweep to either side. Where are we sweeping? Also tracking time. Yeah, we swept the high like that. Nice. Yep, nice. Tracking time. Remember tracking time. And nice. And we're done. Right? If now you can tell this is temptation, right? This is temptation right here. You know that it's out of the time window and the entry has shown lately or post your time window. If I were to trade, I wouldn't take this trade. I'm backed with data. But if I trade this and win, then that's the worst part because it'll be like, 11:40 or up to 12, I would look for entries. But let me change that my trading. But now your trading plan wouldn't be solid. It would be some liquid. It just changes every time. Yeah, so I would have taken this entry if it was within my time window, but now it isn't, so not interested at all. But I know this will go down. Let's see. Boom. You see? Crazy, but no, not interested. Delete that. Continue. Going to for 9 a.m. There it is. Nice 9 a.m. is right there. Mark the high. Mark the low. Mark the swing high. Mark the swing low. Yep. These ones blue lines. Nice. So let's wait for the sweep on 5 minutes. Already swept right there. You can tell we already touched that. A gap. Okay, nice. Another touch. Time. Tracking time. Tracking time. We are out. No need to enter. Out. Done for the day. Continue the other day. Nine a.m. Mark the high. Mark the low. Swing points or an FEG. We have an FEG right here. So I'll mark first the swing point. Then mark the FEG. Right there. So 5 minutes. change the color. 5 minutes. Wanna see the sweep? Tracking time. Out of time window, so not interested. Continue. 1 hour. Nine a.m. Here it is. Swing high, swing low. No. High and low. Then marking this a gap right here. Arguably no. So I'll find the swing high. Then I'll find the swing low. I'll change the color of this to blue. Nice. I want to see the sweep. Where do we sweep? Come on. Oh, nice. We swept the lows. So I'm looking for a back high. Nice. Within our time. So an FEG. Do I take an entry off an FEG? Nope. So I'll leave this to play out on its own. Not interested. So, yep. Another day. Mark that. Going for 9 a.m. Swing high, swing low, and then a high and low. Then we have our swing point like there. Market red. Hold control, move. Yeah, we have a bag right there. Get rid of that. Nice. So when I see either side to be taken out. Yep, we took the high. That's cool. We took the high. We swept that liquidity. I want to see it being swept for leave. Tracking time. Ooh, I like this. Within our time though, I'm gonna take this. Nice one. Then where is our target? Our target like there. One. Crazy. So set that. Wait, how much did I list though? I didn't check. Oh, I list 1.5, 0.5. That's nice. And boom, it stopped us out. That's okay. That's okay. First lows. I like it. So we continue. We find our 9 a.m. We mark it high and low. We mark our swing points. And turn those into blue. Nice. 5 minutes. Where do we sweep? We sweep the lower. We sweep the swing point like there. Wanna see the gap high, bag. The bag's right here. Stop loss, second candle right there. Then take profit right there. 2.3. That's nice. Take an entry. It's 0.5. Save. Let the market play out. Crazy. Textbook entry right there. It's crazy. So yep. Now that has covered the lows and plus some wins right there. But I want to do this though. I want to hide this so that it doesn't determine my brain. So let's continue. Finding our 9 a.m. Right there. Oh, that's nice. Oh, that was May. Crazy. That was the last week. So mark our high, mark our low. When I see one of it to be taken out, do we have swing points, stuff like that? On the high? No, but we have swing points on the low. Mark that. Go to 5 minutes. and start tracking. We swipe that. Wanna see back down? We have a bug right there. Nice, nice, nice. Our entry, once the candle's closed, stop loss right there. Take profit on the low of 9 a.m. candle. Take an entry, risk 0.5, save. And boom, we got stopped out. Nice. So delete that. Yep, delete that. Continue. 9 a.m. Let me go for 9 a.m. Nice. We mark the high. We mark the low. We mark the swing high. We mark the swing low. And turn those into red, into blue. Go to 5 minutes. We sweep the high. Let's see a back down. Nice. Are we going to sweep that? Don't know. Tracking time. Oh, nice. We took that. Now tracking time. Nice. That's an FEG. Not interested. So we are done for the day. Going forward. 9 a.m. Going for. Wait. Did I pass that? No. So 9 a.m. Mark the high. Marks the low. Good. But we still marking that. We have a gap right here which has been created by itself. But so sweeping that should be nice. Swing high, nothing. So we go to our 5 minute time frame. Wanna see a sweep. Tracking time. Oh, we swept high. Tracking time. A bug. No, not yet. Tracking time. Tracking time. Tracking time. We're done. So done for the day. Next day. We're good. So marking our high, marking our low, marking swing points. Oh, we leave an FEG right here by itself. That's nice. We're gonna mark that also. So when I see this get swept, we have a swing low right there. That's nice. So I'll go to 5 minutes. Ooh, we didn't sweep either side, right? Tracking time. Nice. We went into an FEG and swept. We went into an FEG and swept the high of 9 a.m. When I see a reversal for that. Time. Nah, we didn't take anything. So next day. 9 a.m. 9 a.m. Where are you? Here it is. Marking the high, marking the low, marking the swing high, marking the swing low, and turn this into blue. Go into 5 minutes. Great. Nice sweep. Will we reverse? Time. Nice. Okay. Time. Nice. Ooh, I'll take this. Where's our target? Right there. Nice one. Risk that and boom. And that was 3.2, which is nice. Get rid of that. 1 hour. Okay, 9 a.m. Oh, the day is over. The 3 weeks are done, to which I would have taken these entries following my trading plan. It's crazy. So the simulation has finished. Would you like to stay? Yeah, I want to go to the analytics. Oh, wow. This is crazy. This is crazy, crazy, crazy. So you can tell our return was 1.28 out of those 3 weeks. Account balance 1.28, that's good. And out of 5 trades, 2 were wins, 3 were losses, which is quite nice. Win rate is, it's not nice, but according to my data, that's nice. Win rate is 40, and you can tell we were in drawdown, like almost here it was 1% drawdown, and we came back to break even, then a little bit of drawdown, then boom, we went to 1%, right? So this is crazy. 3 weeks following a trading plan, I would have traded only 5 times. That is good for my mental health. 2 wins, nice ones. 3 losses, 1% each, 0.5% each. Man, we humans, I don't know. What do we want in this world? Like, I had my all detailed trading plan, but still lost. That's crazy. So if I go into my trades, come on. So this is my NQ trading plan. These were my trades right here. You can tell most of them, like, they aren't even close to 0.5%. Yeah, there is one like here. So you can tell we have that one, we have this one, and that one. This is crazy, man. Following just a trading plan, not what you want. Like, this is crazy. So my trading plan has confirmed that if I were to follow it for the past 3 weeks, I would have won, and specifically on NQ. But as I said, I trade 3 pairs: NQ, USD, and gold. But if I were to stick with NQ, I would have earned like 1%, and that's enough because only 3 weeks, and we have, they start tomorrow another week. I don't know the next week which will follow. What will I have? Will I lose or will I gain? But guys, create a trading plan, back test it. Once back tested, just stick to it, believe into it.